In a significant policy pivot, China's leadership has announced its most aggressive economic stimulus package in a decade, marking a departure from its 14-year prudent monetary stance. The Politburo, under President Xi Jinping, declared plans to adopt a moderately loose monetary policy in 2025, reminiscent of measures last seen during the global financial crisis. The comprehensive plan includes expanding the fiscal deficit beyond 3% and implementing extraordinary countercyclical measures. This shift comes as China battles its longest deflation streak this century, with producer prices falling for 26 consecutive months and consumer prices near zero growth, undermining the economy's 4.8% expansion this year. Market reaction has been notably cautious, reflecting skepticism from previous unfulfilled promises. While Chinese stocks initially surged, enthusiasm quickly faded. Regional currencies, including the Australian and New Zealand dollars, showed modest gains, though far less dramatic than reactions to similar announcements in September. The stimulus package faces significant implementation challenges, requiring trillions in new debt. In November, the Finance Ministry already launched a $1.4 trillion rescue program for indebted local governments, highlighting the scale of intervention needed. The People's Bank of China's previous rate cuts and increased bank liquidity have struggled to spur borrowing. Beijing's focus on forcefully lifting consumption suggests an expansion of consumer incentive programs, such as cash for clunkers schemes. This shift addresses international pressure, as both the US and EU have complained about China flooding their markets with cheap goods, while domestic consumption remains weak. The Politburo's announcement includes pledges to stabilize the property sector, support the stock market, and boost technological innovation. These measures come as China prepares for potential trade tensions, with threats of significant tariffs from the incoming U.S. administration. Morgan Stanley economists, led by Robin Xing, described the December meeting as sending the most aggressive stimulus tone in a decade, while cautioning about implementation uncertainties. ANZ Bank's Xiaopeng Xing noted the unprecedented wording, predicting strong fiscal expansion and significant rate cuts. The upcoming Central Economic Work Conference will further detail these initiatives, with local governments expected to announce their growth targets in early 2025. However, specific budget details and bond issuance plans won't be revealed until March's legislative session. China's Premier Li Qiang has vowed to use every means possible to boost consumption, aligning with IMF recommendations to expand domestic demand. The government's emphasis on consumption over manufacturing marks a significant shift in economic strategy. The success of these measures remains uncertain, as previous stimulus attempts have fallen short. While the Politburo's language suggests unprecedented commitment to economic support, markets continue to await concrete action, remembering September's unfulfilled bazooka promises. The true test will come in implementation, with March's National People's Congress serving as a crucial milestone for policy specifics.